Hello everyone, welcome to the another session of accounts with Shiva Kumar. I am from Sri Gitanjali Junior College. Today we have selected one important, one interesting, one easy and at most 5-star important concept. Because today we are going to learn the rules for debit as well as credit. Okay, today's concept is rules for debit and credit. In the double entry bookkeeping system, we have two aspects. In the earlier classes we have seen one receiving aspect, one giving aspect. So that two aspects are actually called as debit aspect and the credit aspect. Okay. So for this debit and credit, so there are some rules we will follow with that. This will be a short video. Need not worry with a very short video. So for this we have three rules. One is personal. Second is real. Third is nominal. For debit and credit, there are three rules. One is personal, real and nominal. Now let us understand what is word called personal, real and nominal. The word itself, personal, a word is hidden in that. The hidden word is person. Yes or no? Personal के अंदर person है. Now comes the person. So person are of two types. One is natural person. The other is artificial person. Okay, personal. There are two persons. One is natural person, the other is artificial person. Now who are natural person? You, me, Salman Khan, Shah Rukh Khan, Amitabh Bachchan, we are natural persons. Now who are artificial persons? Artificial persons are those which only exist on the paper. They don't have any physical existence. They only exist on paper. Like, let us see SBI Bank. What is the example? SBI Bank. SBI Bank is an artificial person. Now you can say, sir, not like that. I have seen SBI Bank. I have seen the head office. You have seen the head office. You have seen the manager. They are not SBI. SBI is existing only on paper of registration. Okay. So SBI Bank is an artificial person. Now Ratan Tata. Ratan Tata is a natural person, but Tata Industries is an artificial person. Now don't tell sir, Tata Industries, I saw the factory, sir. That is factory, not the person. Okay, hope you understand. So for the personal, the rules are for debit the receiver, credit the giver. Debit the receiver and credit the giver. Now let us suppose we will take one example for this. Now we will try to understand the receiver and giver. Let us suppose two friends. One is Ramesh, the other is Suresh. Now Ramesh has asked for a book from Suresh. Now he is asking a book from his friend. Mr. Suresh, give me your maths notes. So I will return you back by tomorrow. Yes or no? In this, Ramesh and Suresh. Suresh is giving his book, right? So he is the giver. And sorry, Suresh is giving the book. Suresh is giving the book, so he is the giver. And Ramesh is receiving the book from Suresh. So he is the receiver. So just to tell you the receiver and giver, I took this example, but this example is not correct. I'll give you the correct example now. The question is, the transaction is purchased goods from Akhila worth 10,000. This is the transaction. Now we need to identify is any person is attached to this. Now purchased goods from Akhila worth 10,000. Now in this transaction we are not paying the cash. So this is a credit purchase. In this credit purchase we are seeing purchased goods from Akhila. Now Akhila is standing in the position of giver, because she is giving us that goods. We are receiving that. But Akhila is the giver. Okay. Now we will understand one more example with the receiver aspect also. Sold goods to Ram worth 20,000. Now we have made a sale to Mr. Ram of rupees 20,000. Now Ram is not paying any cash because cash is received, nowhere it's mentioned. So here we have a name called Ram. Now Ram is in the position of receiver or giver. Sold goods to Ram. We are giving the goods. So Ram is in the position of the receiver. Got my point? So here Ram is the receiver. Now coming to the rule. Personal rule is debit the receiver, credit the giver. Now debit the receiver, Ram is the receiver. So debit Mr. Ram. And now in the case purchase goods from Akhila case, Akhila is the giver, so Akhila should be credited because credit the giver. Understood, my students? So person is involved in that. So identify them in receiver position or the giver position. Last one transaction we will take that. With that we'll close with the personal. That is cash deposited into bank. What is that? Cash deposited into bank. Now in this transaction, is any person involved? Simply you are saying, sir, no person is involved. No. A person is involved. That is bank. I told you SBI bank. Bank is an artificial person. Now you are depositing into bank, right? आपका पैसा आप लेके जाके बैंक में जमा कर रहे हैं. You are giving, bank is receiving. So bank को क्या करना है? What we need to debit or credit the bank? Bank is in the position of receiver. So debit the bank. Okay, understood? So this is the personal rule for debit the receiver, credit the giver. Coming to the next one, that is a real account. What is that? Real account. Real account principles are debit what comes in and credit what goes out. Very simple. Actually, my favorite rule is real rule. In this, we need not break our head. Simple. What comes in, what goes out. Very simple. So we will try to understand this with an example. What is that? Purchased computer worth 25,000 for cash. Okay, so this is the transaction. Now we need to identify what is to be debited and what is to be credited. Purchased computer worth 25,000 for cash. Now in this transaction, in this real transaction, the word real itself is telling whatever is really existing. The real things. What is coming in, what is going out. Now whenever you are purchasing a computer, what is coming into the business? Computer is coming into the business. And while purchasing that computer, you are paying the cash. Now cash is going out. Cash is also real. So what is going out? Cash is going out. So real rule is stating that debit what comes in. What is coming in? Computer. So debit this. Credit what goes out. What is going out? Cash is going out. So credit cash. Very simple actually. These are called as golden principles of accounts. No accountant or no account student will call himself without knowing these rules as an account student. Because these are called golden principles. If you know these, if you understand these, first chapter becomes easy. First chapter is connected to the second chapter, that becomes easy. Second is connected to third becomes easy. Third connected to fourth becomes easy. Total accounting becomes easy if you understand these rules. Personal, real, nominal. So hope you understood the real rule. Now we will see with the nominal one. The nominal account rules are debit all expenses and losses, credit all incomes and gains. So nominal account rules are, this is personal account, real account, nominal account. Nominal account rules are debit the expenses and losses and credit the incomes and gains. So what is to be debited? If any expenses are identified, debit that expenses. If any income is identified, credit that income. So now, example for nominal rule. We'll see some examples. Let us see. Paid salary rupees 10,000. Paid salary rupees 10,000. Now, for any business, salary is always an expenditure. Salary is always an expenditure. So, what is the expenditure in this? Salary. So salary is the expenditure. So debit all expenses and losses. So expense salary. So debit salary. Salary should be debited. Now coming to credit one income aspect. We will see one income also. Received commission rupees 25,000. Now you have received the commission worth rupees 25,000. Whenever you are receiving the commission, that commission is a beneficiary for you or not? Yes, you are receiving the commission. So commission is an income. So credit all incomes and gains. Now commission is an income for us. So credit this commission. So this is only an introduction class. In this class, students, I want you people just to remember the rules for debit and credit. Simply briefing up once again. Personal, real, nominal. There are three types of accounts. In the personal account, the rule is debit the receiver, credit the giver. Debit the receiver, credit the giver. Second account, that is real account, debit what comes in, credit what goes out. Whatever is coming into the business, debit that, and whatever is going out of the business, credit that. Okay? So this is in and out. Very simple, actually real. Third one is nominal account. Nominal account rules are debit all expenses and losses and credit all incomes and gains. If business is having any expenditure, that expenditure should be debited. And if business is having any income or gain, that should be credited. So only this thing to be remembered in this concept, and remember only the rules. In the next session of accounts, we will be trying to prepare the journal entries with the help of these golden principles. In preparing the journal entries, without these rules for debit and credit, we can't prepare the journal entries. So get ready with these three rules, personal, real, nominal, for preparing the journal entries. Okay, so thank you everyone. Thank you for watching the video, and do share this video with your friends and relatives who is studying in intermediate first year, because this is one of the basic concepts for everyone whomsoever who want to learn accounts. These are the rules for debit and credit. Okay, thank you everyone.